So Trent, you caught my attention this week. Of course, I'm a subscriber to your research. I need to tidy up my special crops side of this though. I'm getting left out on that one. And so I got to tidy that up, but, you did catch my attention, on a couple things, Durham being one of them, this week. What are you seeing in the Durham market? A lot of growers wondering what the heck do we do with our Durham? What are you seeing out there?
A couple of weeks ago there, maybe it was last week, I forget now, but I identified some signs that the Durham market could begin to rally. So my price index rallied here, I think 20 cents since that point in time. So I think there's I still consider this a bear market rally. There's a lot of overhead supply. So, we need to, you can enjoy these rallies and be have some optimism, but there's a lot of heavy lifting to do before this goes considerably higher, in my opinion. So.
Yeah, I think today, so we're recording this on October 23rd. Today was quite a positive day, a green screen for many of the commodities out there, maybe even, well, let's say many. I can't say all of them, but many of them. Is anything changing, or in your opinion, if you look at the entire basket here, bear market rally would fall as, a more adequate description, and growers should be preparing to take advantage? How would you look at it?
Yeah, well, that's just it. So if we want to talk about wheat first, I think in my opinion, the bellwether is Chicago wheat. Mm-hmm. It's the largest market, most heavily traded, most volume on the exchanges. And I had that sell signal in my wheats trigger here a couple of weeks ago, maybe now.
Yeah.
And I think the prices are probably back at that level, maybe even slightly above that level with this rally here today, really. And so that Chicago wheat, as a bellwether, he was at that $5 level and finding some sort of support from that level. Mm-hmm. And we saw that move today. I did look at the chart here, and there's a lot of volume, a lot of supply overhead at this 516, 530 level in Chicago. Mm-hmm. And I think it's going to take quite a bit of work again to get through that. And that's going to reflect on hard red spring wheat and Kansas also. So,
sure.
It's, we like these rallies, but this is basically a retest of a break of support, which is, at this point, we have to assume that's all it is. So.
Fair enough. So, when you look at, if I even tie back into Durham here on this 20-cent gain, you look at Chicago wheat and kind of getting back to that level of support. I've been, thinking for the last number of weeks or months now, maybe of, you have to take advantage of the small little bumps in the market, these small rallies. You have to be prepared to sell into them. Would you agree with that? Or do you think there's something larger at play here, potentially for some further stronger upside, as we get towards the tail end of 2025?
Yeah, well, I would love to say that the market's rallying higher. It's too soon, in my opinion. There's just too much supply overhead that we're still in a downtrend in the wheat market. There's just very little reasons to be optimistic on the longer time frame. So I think, I agree with you. These rallies, I think we take advantage of them.
Yep.
And if they continue, then we utilize those tools in the futures market, which, you and I both talk about extensively. So.
Another scenario, a couple scenarios presented themselves over the last couple days here, but, today's was, hey, the company A, whatever, needs CPS wheat, here's the price. I don't want to call it special. It's the better price to fill these darn cars. What do we do? And my thought was, well, yeah, you got to do something, especially if you want to generate some cash for the end of the year, you want to, get a little bit of grain off the farm, maybe clean up a bag or get the bin tops going. Like, it's not fun, but you have to do a little bit of this in this environment. So, and I said, same thing. You have a trading account, just be ready to use it, when the time is here. So, all right. Now, we've been talking cereals so far. when you look at oilseeds, I thought you had did you throw something interesting about soybeans out into the world here today or yesterday? I know we didn't talk about that pre-recording, but was there a comment on soybeans that you had?
Yeah, I mean, like I think it's interesting, anyways. But there's a chart pattern that's been forming. I've been publishing a little bit of posts on the soybeans and sharing it in the newsletter of just of this chart pattern that I've been watching set up, suggesting a rally higher. And I think my post today was about a news event. It's approaching news event territory. So I believe that news follows price, and we're getting at that level where if we can, it'll be a breakout level in soybeans. And if that happens, then there'll probably be some news surrounding, there'll be a catalyst for that or a reason given for that breakout.
Yeah.
And, maybe we'll see in canolas at another level of resistance right now too. So, and I didn't really look at soybean oil here this afternoon, but I mean, there's some signs of, maybe we get that breakout here sooner rather than later. So,
well, after hitting record, I got a notification from Reuters. Trump will meet Chinese President. Is it Xi? Is that how I'd say it? Next week in South Korea as part of a trip to Asia. So that's been in and out, in and out. Is it happening? Is it not happening? Well, as of hitting that record button, maybe it's happening, Trent. Maybe that's the story they'll go with. But anyways, all right. Okay, so canola market, a very important time in the market right now, would you say? I got a little fired up on the show last week saying, hey, canola's rallied or climbed $20 or $30 a ton from the low here from a few weeks ago. Like maybe you got to do something or at least get it on your radar. What are you seeing in canola? We're at an important point. Yeah. How would you tackle that at this time?
A very important level, in my opinion. I thought maybe we'd get a further pullback, and maybe we still will.
Yeah.
But it's moving in the right direction. We keep pressing up against that 630, 633 level. And sooner or later, those sellers will start to become exhausted, and we'll get up to that 640, 660 level that, we've had for consideration, I guess, for some time now.
Yeah.
So it's a very, very critical level, in my opinion.
So you have, that, and you also, cash price was improving, basis was improving across the prairies as well, I think, from what you wrote last week. So, if you could marry those two together, a little better basis and a little pop in futures, man, you could be cooking here with a couple of sales. So, yeah,
things could be really improving on that front. So,
all right, Trent. Well, I appreciate your comments on that. Lots of discussion right now around the fertilizer markets. It's different though right now, Trent. So what in the summer, it was all, farmer kind of driven. Hey, do we buy now? How much do we buy? Lots of people getting quotes, regularly and price climbing in that environment. So, I don't want to say farmers were causing it, but they weren't helping anybody relax in that environment. There's a lot of action or a lot of talk of action. Now it's flipped. Now the seller, the retail is out, driving down the driveway, pounding the pavement, at the kitchen table, in the office, trying to get some sales going. They're tying in all sorts of things. They're tying in canola seed, buy your fert, get your canola seed. We'll do a whole package thing, a big price discount, payment terms. Don't worry about it. We'll kick those down the road, 0% interest. It's getting wild out there in a sense. What are you seeing in the urea market? If I bring it back to fertilizer, what's going on with urea these days?
Well, to your point, we had that rally late summer, and that looked, I guess, not promising, but in terms of the chart, bullish for urea. And that sell-off's happening, and I see very little support below these levels on the chart.